Well, markets have been largely unchanged for the past week, but are we about to see that change this week? Hi everyone, my name's Sam and this is the Traders Circle weekly market update. Today is Tuesday, the 16th of May, 2023, and just before I get into it, you do need to be aware that anything I say is general advice only. It does not consider your personal financial circumstances, so you have to decide if what I'm saying is appropriate for you. One of the key events of the last fortnight has been the continued selling in commodities. We've seen oil come off, it's now back to sort of 12-month lows. We've seen iron ore come off, and on some spot markets it's dipped below the $100 a ton mark. We've seen copper prices come off, other base metals have come off, and really they've been drifting lower with expectations of an economic downturn this year, with weak economic data. And they were rebounding at the start of this week, so we saw prices tick up a little bit on Monday, but then today we had really weak Chinese economic data. Industrial production was weaker than expected, fixed asset investment was weaker than expected, and that forced those prices back down. So as I'm speaking, we've seen iron ore come off its daily highs, we've seen copper push into the red, oil starting to reverse. And really, one of the key stories at the moment is this downwards movement in commodities prices. Now, the Australian market, it's a commodities-rich market, so if these prices keep coming off, that's going to be a negative for our XJO. And what did we see on the market today? We saw our market drift lower as those prices drifted lower. So do watch this space. Many people had thought the lows were reached last week and that we were going to see a rebound from here. And yeah, I'm not too sure if that's the case, or whether we're about to see another trough in the coming period. But commodities space, definitely one to watch. I wouldn't be trying to pick a bottom just yet until we see a clear break higher. The next thing I want to talk about was wages. Tomorrow at 11:30 a.m. Australian Eastern Standard Time, we're going to see the wage price index for the first quarter, and that'll show us how wages are growing in Australia. Now, the RBA, business groups, some politicians, they're all saying that wages are growing too rapidly, that this is worsening inflation, that this is creating all sorts of economic problems. But the fact of the matter is that wages have been underperforming relative to consumer prices or relative to inflation, and people have been seeing a real wage contraction. That might change at this reading, and the market will be watching this very, very closely. A strong reading here is likely to send the market lower because it means that the market will expect more consumer price increases, more inflation. And that means that we're going to see more rate rises, and that's probably going to force the market lower. Similarly, if we see a weak reading at this wage price index data, that could force the market higher. It could create the market to start to price in further rate rise pauses. It could start the market to price in rate cuts in the foreseeable future. So this is going to be a pretty big one. I think that salary earners, wage earners have been unfairly blamed for a lot of the inflation that we've seen. Numerous studies point to higher levels of corporate profiteering or supply side issues as perhaps driving the inflation, not necessarily huge wage growth. So it'll be interesting to see what this reading holds. And just on that, the next thing I wanted to talk about was the RBA. So we saw their monetary policy meeting minutes from their May meeting released today, and really it didn't contain an awful lot. Initially the market ticked a couple of points lower, and then it ticked a couple of points back up, and overall there was no real reaction to it. Something that the RBA said, a bit of an admission, is that they don't see inflation or CPI coming back to target range until 2025. Now, for me, that's quite a negative thing because it's very hard to see the RBA cutting interest rates, even sustaining a pause of interest rates with inflation above target range for 2 years. Really, you'd expect them to, perhaps even lift rates if that's the case. So this market, which has rallied on the back of a belief that rates are going to pause from here and then be cut soon after, I think really has to start to reassess whether that's going to be the case. Now, on the other side of things, the RBA is terrible at predicting these things. They never get it right. They're really bad at predicting forward inflation, forward interest rates. So, take that with a grain of salt. They've consistently been incorrect on predicting inflation and interest rates in the future. So, maybe the market's calling their bluff or calling them incorrect and saying, nope, inflation will be back within target before you know it, and you'll be cutting rates before you know it. Still, I was expecting to see a more negative response from the market, and that didn't materialize. And to be honest, it doesn't look like much is going to cause us to move at all. We've been inside such a narrow range for the past 8 days. We've moved, a total of about 50 points in that time, really probably closer to 30 points in that time, and not much has happened. It's been absolutely stagnant. Some of the large cap stocks have held up, but in the small end of the market, the micro and the small caps, they've just drifted off in a lack of volume. They've just drifted off and sold off with no interest, and really it's been, the most underwhelming market I've seen for some time. Wouldn't be surprised to see a bit of downwards movement, given we've seen the weak commodities prices. We've seen, perhaps inflationary signals. We've got the wage price data tomorrow, but again, it's not going to be something I'm going to call until we do see it. There are plenty of levels of support and resistance to watch. Support at 7150 here, resistance at 7300. Until either of those levels break, you have to say we look sideways. If we do break those levels, there are additional levels at say 7370 as resistance, and maybe 7000 and then 6900 as support. So waiting for a clear break, not trying to preempt it. There are some pretty big fundamental events coming up, and those events could cause it to go in any which way. So that's our market. Let's have a look at the US market. This is the US S&P 500, and they've also been tracking sideways for much of the last couple of months. They're right at the top of their range, but again, they're really struggling to break higher. They've got some resistance at 4170 on the S&P 500. If that breaks, we're looking at 4200. Now to the downside, there's some support at 4050, and if that breaks, the next level is 4000. Again, there's not much of a technical signal here, so we're waiting probably for a fundamental signal to cause things to break. That could come in the US from any number of sources. They do have a lot of things going on at the moment. They've got the government debt ceiling, which there was some positive sounds over the weekend that it may be resolved, but it doesn't look like it's any closer. If we do see a government shutdown, that could trigger some selling, but similarly, a deal might cause a break higher. Otherwise, they've also got some economic data that could point either to more rate rises in the future, or it could point to a continued rate pause and then perhaps future rate cuts. Their CPI growth actually didn't continue to fall at the last reading, so really they do want to see some deflationary data. Otherwise, I think you have to consider that we may see a resumption of rate rises in the not too distant future. Regardless, markets have it in their head that we've seen the peak of rates, and they may be correct, but I wouldn't be trying to preempt the break until we see it. Alright guys, that's it for this one. Hopefully you enjoyed it. Let me know in the comments which way you think things will break. Give me a like and click the subscribe button, and I'll see you in the next one. Bye for now.